results. Revenue at 3.17 billion euros, up 4.2% year over year.
Reporting third quarter sales up 4.8%. Franklin Golf Romeo.
The Fed policy will be driven by the pace of the data. Same policy will remain accommodative.
Futures off session low, still down about 1% on the day for a little more than 4 pennies.
Which include, when price gets to the expiration break even, or if the position is down a certain percentage, say 6 to 8%. I still use those adjustment points, but what I'm going to present here is a way to incorporate the trending movement of price as a trigger for making adjustments before it gets to the break-even point, or before you're down, say 7 or 8%. So the indicator that I use, it's a price-based indicator, and Seth, if you want to scroll down to slide 6, just to show it. This is a.
Excuse me.
All right. Well, I'll just keep talking. What Seth's going to show you is basically a daily chart of the S&P 500 index, and the bars that you see are Heikin Ashi bars. They're a type of Japanese candlestick, and this bar is actually available in Thinkorswim, and it may be available in other charting platforms. But I use this bar to help me identify quickly on a chart price directionality and the strength of trend. And I use that in conjunction with this indicator that I designed, which really is just a trailing stop indicator. And you can see it on this chart. The trailing stop indicator, it's a magenta line with boxes that's above price, and there's another one that's below price. It's a blue indicator, blue boxes, that's below price. And basically I started using this as a stop indicator for directional trades. And I noticed that it did a pretty good job at telling me when when the price was trending, which direction it was trending in, and when the trend had strengthened. So I thought, maybe I could use it to help me to adjust a little bit earlier than waiting to get to the expiration break even, or waiting till I was down, a certain percent loss. And I found, after I back tested this only for about 18 months, and I found that it did a pretty good job. I traded it live, I guess since February, and so far, it's been pretty good. But it's not a there's some discretion that I do use, and I can get into that as we go through the actual example slides. But this is basically what I'm looking at, and I think that if you got rid of the indicator, if you got rid of the trailing stop indicator, you could probably still do a pretty good job at identifying trend and noticing where the trend is picking up if you have an understanding of the Heikin Ashi bars. And these information on these bars, if you just search. So Seth, if you want to go back to slide 2.
Okay.
Actually, for people who aren't familiar with the bars, I actually wrote the name out. You could search it on the internet, and there's a lot of information on these bars and how to use them and to interpret price action.
Okay.
So I guess in the first bullet, if you go down, I guess the third or fourth dash, it says Heikin Ashi bars, and you can just search that on the internet and find out tons of information on it.
Right.
But basically, I'll just go through this slide pretty quickly. But when you're looking at trend, most people know you're looking for a series of higher highs and higher lows to define an uptrend, and for a downtrend, you're looking at a series of lower highs and lower lows. Generally, the closes are also in the same direction. trend may take a pause. There may be periods of consolidation followed by a breakout. The expectation being that the breakout would be in the direction of the prior trend. In terms of identifying trend, I also use a little bit of Dow theory, and there's plenty of information on what Dow theory is, and it's very simple to use. But basically, price is moving in a direction. Let's say it's moving in an uptrend. It makes a high, it pulls back a little bit, makes a low, but not as low as the prior low, and then it reverses up, taking out the last high. And that's a very simple explanation of Dow theory. And I find that combining the Heikin-Ashi bars with the Dow theory, it does a pretty good job of replicating the points in time when my indicator signals an adjustment. I think people should feel free to develop their own indicator. Even if I were to explain how mine works and what it's doing, I would bet that some people wouldn't be comfortable with it, or find that it triggers too late. So I would encourage people to experiment and see if what they can identify on their own.
Thank you for watching this clip of our Options Tribe webinar. The rest of the recording is available on OptionsTribe.com. I'm Seth Freudberg, and I've been hosting the Options Tribe since May of 2011. We've brought in options experts from all over the world to make excellent presentations to our members. So go right now to OptionsTribe.com to learn more about options education, or you can send me an email at sfreudberg@smbcap.com.